buying 2 stocks with 5 times more potential than others. There are different sides to penny stock investing, plus they could not be more opposite. The spectrum ranges from instantaneous riches, enormous gains, and 20-year-old millionaires, to misplaced investments, scams, illegal activities, and bankrupt businesses. The fact is somewhere between those extremes. Investors should fully comprehend the potentials and dangers before they dip into the penny inventory club. Today, we are here to share some penny stocks with you that carry the potential to increase their values dramatically. Some of these penny stocks are steadily increasing their value with every day passing. There are lots of excellent businesses trading for pennies. They've proven management groups, rock-solid fiscal ranks, developing market shares, enhancing financial ratios, and tumultuous services or products set to control the industry. Anyone who has invested 5% annually knows the excitement that witnesses the huge gains and losses of one of penny stocks. Nearly all penny stock traders possess little amounts by which to begin trading. If someone has $500 to exchange, they might buy 4 or 3 stocks of a larger company but could purchase hundreds of the penny stocks shares depending upon themselves. That's the right thing about penny stocks. Not many penny stocks see a rapid rise in their market price, but those that do, can typically increase their rates dramatically within days. The cheap, thinly traded penny stocks character makes them an ideal instrument for tricking investors from the money. Together with the pump and dump scams, the promoter heaps up on stocks at fractions of a cent, then puts lipstick on a pig, telling the investor community grossly deceptive statements best, or clear lies at worst. Their glistening mail-out appears legit, their site seems fancy, and the story they're telling you makes sense. They then market because their traders buy and push the price higher. The promoter makes money, while anyone who bought eventually loses. With such pleasing advantages and tricky disadvantages, penny stocks need comprehensive research and attention before investments. Here are the 2 penny stocks that have great potential for long-time investors and are continually climbing. Vine Therapeutics. The headquarters of the company is based in Bridgewater Township, New Jersey, United States. It was founded back in 2003. Vine Therapeutics Inc. functions as a clinical phase biopharmaceutical firm. The business develops medicines and remedies for treating chronic pruritus and cough. Vine Therapeutics serves clients globally. The center of Vine Therapeutics is a hand-picked group of pharmaceutical business professionals worldwide that has come together to drive beyond the traditional belief they encountered more conventional company structures. The company's staff has long-standing development and research expertise, paired with strong business expertise. Vine has got a composite of varied perspectives and business expertise needed to recognize how traditional methods fall short, and they are passionate about creating new and unexpected answers to enhancing patient care. Vine Therapeutics is implementing technical expertise to identify approaches to battle the status quo about how medications can operate and do the job much better. They are the leading experts in dermatologic medication creation, but we are not stopping there. This experience is a springboard for our strategy to dermatology invention and outside. Together with the dermatologic medicine invention experience, Vine is working to create and commercialize solutions that were long thought impossible. Vine Therapeutics is employed to fix some of the most formidable therapeutic challenges. With each issue the company carries on, their strategy would be the same, and that is to question conventional assumptions and discover a much better alternative. The company creates a habit of inquiring why and why not. During Vine's scientific invention, they can question the status quo and reimagine what is feasible for conditions with large unmet requirements. At dermatology and outside, they see a chance to create a difference in patients' lives. This passion compels the enterprise to observe the answers and overcome barriers in all facets of our job, mainly because the company emerges as an entrepreneurial, high-performing business organization. It is a different sort of specialty pharmaceutical business by design. Through intelligent queries and thoughtful responses, we're trying to make the thought impossible possible. Vine Therapeutics is offering powerful and efficient products in the world of dermatology or skincare. Coming to the stock market, Vine Therapeutics has excellent potential. It offers great value for very little purchasing power, and there are now 9 purchase evaluations and 1 robust buy evaluation for your inventory. The consensus among Wall Street equities research analysts is that investors must purchase Vine Therapeutics stock. That rank is mostly influenced by a primary rating of 95. Besides the ordinary score from Wall Street analyst, Vine inventory has an average target cost of 6.312. This implies analysts expect the stock to rise 114.69% during the next 12 weeks. Vine rank also comprises a long-term technical evaluation of 68. The short-term technical rating for Vine is 34. Vine Therapeutics Inc. inventory is reduced by -7.41%, while the S&P 500 is reduced by -0.1% as of 1:26 p.m. on Wednesday, February 10th. Vine is reduced by 24 cents in the last closing price of $3.17 on the quantity of 12,153,569 stocks. Over the previous year, the S&P 500 has gained 16.37%, whilst Vine is reduced by -43.68%. Vine dropped $3.19 per share over the previous 12 months. So people, here are the new stock to boost your list. Zomedica. The enterprise was founded in 2013 and is based in Ann Arbor, Michigan, United States of America. Zomedica is an animal health company dedicated to fulfilling the requirements of clinical veterinarians in a way that encourages both individual and clinic health. The company's job is to improve the effectiveness and fiscal well-being of veterinary professionals by providing professionally valuable diagnostic services and products. It recognizes the psychological advantages that come from working in the animal care sector, the sacrifices made in satisfying the noble furry oath, as well as the challenges affecting veterinarians' achievement. The group consists of clinical veterinarians, animal caregivers, advanced scientists, and business specialists dedicated to assisting practicing veterinarians in recalling why they opted to take care of creatures and recapture the pleasure within their livelihood. Zomedica participates in general practice veterinarians, veterinary healthcare groups, and veterinary experts to build products for clinical use based on clinical demands. Board-certified veterinary internists with disorder condition experience guide the development of stringent goal specifications for the functionality of our assays to make sure that our analytic ranges, precision, and precision goals will empower first-in-class organizational dimensions for feline and canine inhabitants throughout a range of healthcare needs. Talking about the stock market, Zomedica or ZOM seems to be a nice option. The Zomedica Pharmaceuticals Corp stock price dropped by -3.3835% on the previous day, which is Friday, February 12, 2021, by $2.66 to $2.57. Throughout the afternoon, the inventory fluctuated 12.34% from per day reduced at $2.35 into per day high of $2.64. The cost has climbed in 7 of the past 10 days and is upward by 179.35% within the previous 14 days. Volume dropped on the previous day together with the inventory, which is a fantastic indication as quantity ought to occur after the stock. On the previous day, the trading volume dropped by -96 million stocks, and generally, 102 million shares were bought and sold for roughly $261.12 million. The inventory is in the top portion of quite a broad and powerful growing trend in the brief term, and this might normally pose an excellent selling opportunity for the short-term dealer as response ahead towards the lower portion of this tendency can be anticipated. A breakup in the top trend line in $2.83 will indicate a greater speed of climbing. Considering that the present short-term tendency, the inventory is forecast to rise 247.06% throughout the subsequent 3 weeks, using a 90% likelihood maintain a cost between $4.13 and $9.83 in the conclusion of the 3 months. The Zomedica Pharmaceuticals Corp inventory holds purchase signals from both long-term and short-moving averages, providing a positive prediction for the inventory. Additionally, there's an overall purchase signal in the connection between the two signs at which the short-term average is over the long-term average. On down corrections, there will be some service in the lines in $2.32 and $1.06. A breakdown under one or more of these amounts will issue sell signs. There's a buy signal in the 3 weeks moving average convergence divergence. Some unwanted signs were issued too, and these might have some impact on the close short-term improvement. Additional collapse is signaled until a brand new bottom pivot was discovered. Volume dropped along with the price throughout the previous trading day, and this decreases the total risk as volume ought to stick to the price movements. Thus ZOM has great potential for short-term money profit. These were some stocks I would suggest to you to invest in. Make sure that you subscribe to our YouTube channel. Let us know in the comment section that which one of the two stocks you do think is better to invest in, and what makes that stock stand out. Tell us about any stock you want us to review and reveal its potential. We will try to do our best. Thank you so much for watching. Hope so that video was very helpful for you. Till next time.